So purely by having this small arm's length of distance between you and an asset, you can prepare your disclosure form entirely correctly. You can fill it out without having to worry about all of those things that you haven't disclosed, and you'd be following the rules. And I think that that's part of the challenge here, that we've left open, I think, both with the family members and the beneficial ownership issues, we've left open two of the biggest gaps that we know internationally are used in grant corruption schemes. And these are issues that are quite significant and I think quite substantial vulnerabilities. And it's something that is not just in one particular section of the financial disclosure requirements. It is a principle that needs to be applied throughout. So in every section that you would have to speak to your beneficial interests, for example, when it relates to property, when it relates to companies, etc.
So we've now highlighted two blind spots of the form. In paragraph 19, you deal with specific categories of assets that the form doesn't ask for. And can you take us through those?
Sure. So
it's not just categories of assets, it's issues relating to assets.
That's correct. So in the current approach for each asset that you declare within a category, let me use the example of purchasing a house or owning a house. Within this particular category, there are 4 or 5 specific pieces of detail that you need to provide about this property. You would have to explain where it's located. You might have to explain what the value of the property is. But there are additional pieces of information that are really important for subsequent processes when we get to the stage of lifestyle reviews and investigations. So this additional information that one also needs to know is when was this property acquired? How was it acquired? What did you know, how much did it cost when you paid it? Of this asset that freed up capital to purchase a new asset. And so it helps us understand what these changes look like with time, but also detect potential cases where somebody all of a sudden shows up with assets that have previously been undeclared, and you might have questions. Are these omissions from previous years, or has this person now been able to buy a brand new house? Where has that money come from? Is it them that has paid for this house or car, or is it potentially a gift that somebody might have given to them? So there are little bits of pieces of information like that that consistently throughout the form are required to better understand the origins of these assets, to understand the context within which they were acquired, whether they were a gift, whether this is something that you bought, whether it's something that your spouse bought, for example.
Then moving on to the next category, which I anticipated, which is types of assets that fall outside the scope of the current form.
Sure. So within the current form, the focus is largely on some of the more common and I guess high value items that one might consider. So it includes things like vehicles, it includes companies, it includes property in the form of a house, for example. But I argue that there are several other common asset types that also need to be considered, and some of these can be quite important. And again, this is about building a full picture of not just a person's interests and assets, but their financial means. And this is one of the consistent narratives or themes that I want to point out to. Across the form, what we need to do and what we need to be able to do is understand the kind of flows of an individual's financial status, of what kind of wealth is coming in, where is it going, where is it being spent. So some of the assets that I mentioned that currently are outside of the scope of the form, this includes high-value movable property other than vehicles. So for example, things like jewelry, precious stones, livestock, and other similar high-value items that might hold quite significant value, but might not necessarily be disclosed and are not required to be disclosed. The second point is around virtual and intangible assets. And here I particularly mean cryptocurrencies or other kind of digital tokens that can often hold substantial value. And in many cases, this is an asset that is extraordinarily easy to transfer, both between individuals, across borders, and can hold a huge amount of value, and is not something that we would currently be considering in the framework. The third point that I make is around monetary assets. So here I mean cash on hand that you might have, say for example in a safe. It means your bank accounts, being able to, in your financial disclosure form, not just say I own 2 cars and a house, to say I own 2 cars, a house, and 2 million rand in a bank account, for example. Having that level of detail is important for understanding the origins of assets down the line, for understanding people's financial means when they acquire new assets. And so, again, this is part about understanding the full picture, understanding changes over time. And then I also raise a point around the form currently focuses on, it's a new section that was added, I believe, in the last amendment in 2023 that introduces a section where an individual must report any liabilities, so loans that they owe somebody. What you also need to understand is money that is potentially owed to an individual, so loans that they may have given out. So that's relevant both for the question of understanding a person's financial means, their sources of income, and what's happening there, but also what kind of relationships they might have to other actors and their associates. We might want to ask questions around why an individual is loaning potentially a large amount to somebody else, and what kind of obligations are tied to that, and what does that relationship look like practically.
Dr. Schoeman, how do these forms treat, it's a modern phenomenon where something is neither an asset nor a loan in the true sense, but a public official has the right of use of an asset, either a house or a car, that belongs to somebody else. How do the forms treat that? Because it's not a loan to you, it's not an asset registered in your name, it belongs to a shady third party who purchases it in their own name, but you have access and right to use it as and when you please. Do the forms deal with that, and how do they deal with it?
So it's an excellent question, and this relates to our definition of beneficial ownership. So it's not just about ownership, but as you say, about beneficial use, and making that clear. And so the way to approach this in your form, and this is much simpler in an electronic format, but for each asset that you declare, that you state, this is an asset that I own under my name individually, or that I have beneficial use of, I have beneficial control, or I have joint ownership maybe with my spouse, etc. And so this deals with that issue of beneficial use. And so with something like this, you'd have to very clearly establish what the requirements are. And this is why good guidance is important, why you need advisory services to advise people on how to prepare their forms so that they can ensure that they're preparing the forms correctly. But it's a fantastic example of why it's important to ensure that these requirements are as broad as possible so that people can fill out all kinds of interesting situations that they might find themselves in, to ensure that we have a full picture of their circumstances, of their interests.
Because I can imagine a situation where a senior general in the SAPS drives a 3 million rand car, and then when it comes time to disclose, he says, well, it's not mine, so I don't have to disclose it. And there's nothing the SAPS can do about it because it's really not his car, it's his friend's car or somebody else's car, although it parks in his garage every day and he uses it every day.
That's exactly it. And I think that's a great example of why this current gap in requiring disclosure of beneficial ownership or beneficial interest is such an important one, because that official can entirely declare that they own 0 cars and they would be following the rules. There is nothing we can do about them, and it would be correct. But we know that there is another reality, there's a factual experience on the ground that differs from what is required.
The last category that you speak to is the way the form treats income in paragraph 21. Can you elaborate there?
Sure. So I've spoken to this a little bit in terms of how we need a kind of constant narrative throughout the financial disclosure form to understand the origins of each asset, when it was purchased, what its value was at purchase, but also in many cases when it was disposed of, because this is about understanding the individual's kind of flow of financial means and what this looks like over time. So when I speak about income here, we're not necessarily talking about this in the same way as an accounting practice of saying this was the revenue this year, this was the expenditure. We need to understand things like taking on a loan is a type of income, right? Because that extends to your financial means. And so having a consistent view of what money is coming in and where it's being spent, this then feeds into the downstream processes on the lifestyle reviews, on the audits, and understanding what kind of lifestyle somebody is living. So to speak to the question of beneficial ownership as well, and somebody potentially having a new vehicle or property showing up on their declaration, for us to be able to credibly question the origins of, say, a vehicle or a new piece of property, and whether an individual paid for that themselves, we would need to know whether they had that financial means to begin with. If this year, all of a sudden, they have a new property that they didn't declare last year, is it because they've disposed of some assets that has freed up cash? Is it because they have a large amount of money in a bank account that has been lying dormant, waiting to purchase this new asset? So again, it speaks to the kind of understanding of the kind of constant flow over time of income and expenditure. And so it's in part, it's reflective of the current approach that I criticize, that our current approach in the financial disclosure form is essentially a list of assets that one owns. It is not intended to understand these changes over time. It's not intended to understand the additional kind of interest that somebody might have. And so some of these changes that I propose, and this is based on good practice internationally, it's about strengthening the downstream processes, about having the necessary information available to detect potential anomalies and to support the kind of investigations that we need at a later stage.
Now, a question that sort of comes to my mind is, I can see the logic of everything that you're saying about the needs to improve the substantive content of the disclosure form, to have a disclosure form that will give you much more useful information. But one needs to strike a balance between the utility of the disclosure form and making disclosure requirements so onerous that they are incredibly difficult to comply with, and that, I mean, in an extreme case, they may drive people away from the public service, but even in a limited sense, if you make a form so difficult to comply with, the capacity to say, well, you know, I didn't actually understand, I had to do this or I had to do that, presents a defense when you start taking action on the basis of non-disclosures. What's your response to that?
Sure. And I think this is an important question. I think you do have to find a balance between kind of ease of use and ensuring that people can effectively comply with the requirements. But you also want to be as wide as possible to find cases of people engaging in conduct that they shouldn't and having interests that they shouldn't. And I think what we need to understand is when one is filling out these forms, in many cases, you wouldn't have much to report in all of these categories. I mentioned, for example, virtual currencies. Many public servants probably wouldn't have to worry about filling out that section of the form because they, for example, don't hold Bitcoin. And it might be the case in many of these sections. 80% of your public servants will probably only have to declare 2 or 3 categories of information. It would be your house, it would be your car, maybe your bank account if we extend it to that. And that is probably your average person. And I use the example often of thinking about when we submit our e-filing for SARS. There are, I don't know, 20 different forms of income that we can report. Most of us only have to do a few sources of income. And it's the exact same concept that in many cases, you wouldn't necessarily have to worry about all of these other categories of assets to declare or all of the complexities, because most individuals would have a very normal, very standard, straightforward profile. Where this really matters is the complex cases, is the difficult ones, where people are trying to engage in funny business, trying to get around the rules. And that's why it's important to have a form and disclosure requirements that are as broad as possible to ensure that the net is wide enough to capture those types of cases. But for most declarants, it would be a relatively straightforward process. And the next section speaks to the e-disclosure system and digitization. And one of the great advantages of digitization, even in the current e-disclosure system, an official, when you're preparing your declaration, you can import your submission from the previous year. So that already makes your life much more difficult. Unless you've had substantive changes, you've disposed of an asset, or you've had some kind of, significant windfall gains, your disclosure form would probably look very similar year from year. But what really matters is where you have those interesting cases of people that are the anomaly.
You said makes your situation much more difficult. I think you wanted to say makes your situation much more easy in relation to the e-disclosure form. You're just importing. So essentially, if I understand your evidence, what you're saying is that if a comprehensive form is introduced, in most cases, it's not going to affect public servants because most public servants have a very limited range of income and assets that need to be disclosed. It's important to have the complicated or the comprehensive form because you need to have enough information to catch people who are essentially making unlawful income and hiding it. There may be one or two, or there may be a limited class of people who have behaved perfectly legally, but may nevertheless find it a bit onerous to disclose all of their assets for reasons unrelated to corrupt income. But with an e-disclosure system, that's a once-off onerous, for the most part, that's a once-off onerous process. You'll just import everything thereafter. And it's only if there are dramatic movements in your assets and income that you need to disclose that it's going to be an ongoing problem, and those cases are going to be few and far between.
Yeah, I think that's exactly right. I think for most people, for most categories, you would just say nothing to declare, and you can move on to the next one. If you have this system where you can import information from the previous year, I mean, how many houses does a person buy in their lifetime? This is something that should be relatively consistent. And so extending the form to requirements like beneficial ownership, most civil servants, I imagine, are not